Dear students, today we will discuss illustration on stores ledger account under FIFO method, under LIFO method and also under weighted average method. Here we will be going to solve similar problem for different methods so that it will be easy for you to understand. Okay. From the following information, prepare store ledger account under FIFO method, LIFO method and weighted average method. So here 1st January, they have given the opening stock of 200 pieces at 2 rupees each. 5th January, 10th January and 28th January, they have given the purchases. 2nd January, 7th January, 12th January and 28th January, they have given the issues. You can see here, they have given the rates only for purchases or the receipts, and for issue, they have not given the rate. This is one thing. And the second thing is, they have just given one side all purchases and one side all issues. So observe this date. We have to do the solution date wise. Okay. As per the date. So like 1st January we have opening stock. We will write this. Which is the second date. We have 2nd January. Some issues are there. Right. They have issued some of the materials. This transaction we have to take next. So 5th January they have given purchases. So the next transaction is for 5th January. So like that you have to write order wise. Okay. So let us start with the solution. Here we are going to prepare the store ledger account under FIFO method. So FIFO method is nothing but first in, first out. So here whichever the materials the company is receiving first, those materials they are going to issue for the manufacturing of the product. Okay. So first in, first out means whichever they are receiving first, that they will be issuing first. Okay. So here the 1st of January, they have opening stock. Opening stock, whatever they have shown, that directly we are writing in the balance. So what is the opening stock they have told us is 200 units to 2 rupee per unit. So which is nothing but 400 rupees. So quantity and rate they will give, amount we need to calculate. Okay. So 200 multiplied by 2. Okay. So that you got 400 rupees. So 2nd of January, as per the problem, they have given 150 units they are issuing. 50 we will deduct from this 200 units. So what is the rate for this 200 units? 2 rupee per unit. So that's why we will take this rate only. Is it clear? So 150 into 2, this is 300. So that's why they will not give rate in the issues. Okay. Or whichever material we are issuing, as per its rate, we have to issue. Okay. So out of this 200, 150 they have used. On the balance, they have now 50 units. So 50, what is the rate? 2 rupees per piece. And 100 rupees will be the amount. Okay. The next thing, on 5th of January, they are purchasing 100 for 2 rupee 20 paise. So for this we are adding now 2 rupee 20 paise into 100 is 220 rupees. Writing the balance, you have to write both the balance because you have two different types of stocks which you were already having. Earlier you were having this stock 50 for 2 rupee per piece and 100 rupees. And now you have received one more stock that is 100 units for which the rate is 2 rupee 20 paise. So this you have to write separately. So both the stock we will be going to write separately. Next again on 7th of January they have issued. How much issues they have? They are issuing totally 100 pieces. Now what the 100 pieces they are issuing? As we are doing FIFO method, see this is our first stock. Okay, this is the second stock, stock number 2. What the balance we are having? This is our first stock and this is our second stock. And from the first stock, we will take from that 50 units we take. Okay, we will issue. And remaining 50 units we take from the second stock balance. Whatever we were having the second stock, 100 units. Out of these 100 units, we are taking 50 units. 50 units. What is the rate for this 100 units? 2 rupee 20 paise. So 2 rupee 20 paise we will show and 110 rupees. And this is how. And now this out of these two stocks, 1 and 2, the first stock is over now. In the second stock, what the balance we have? Only 50 units are remaining because 50 units we have already issued. 50 units and 2 rupee 20 paise is the rate and 110 rupees is the balance. This is how we have to issue the material in the FIFO method. On 10th of January, they are again purchasing 150 units or 150 pieces. So for what rate they are purchasing? 2 rupee 40 paise. So this is what the total amount comes. 2 rupee 40 paise into 150. Okay. So now you can write already again we have to write two stocks, right? One stock which is a older stock what we were having, and the second stock now what we received. Okay, recently what the company has received. This is our second stock. Got it? So next again 12th of January they are again issuing 100 units. So when they are issuing again 100 units, So from the first stock we take, like how we did earlier, first we will take the oldest stock. So that is 50 units and 2 rupee 20 paise. Another 50 units we take from this 150 units whatever we have received on 10th of January. So from this we take 50 units. The rate you can see here 2 rupee 40 paise. So this stock is for 2 rupee 40 paise. 120 is the total amount. And what is the balance remaining now? Out of this 150, 50 units we have issued and we have the balance of 100 units now. 2 rupee 40 paise and 240 rupees is total amount. Again, on 20th of January, they are receiving or purchasing 180 units for 2 rupee 50 paise. So 450 is the total amount. So likewise, the first stock, whatever we were having earlier, old stock, that we will write as a balance, and this is a second stock which we are receiving now. Okay, this also we will write in under balance. Now on 28th of January, they are issuing 200 units now. 100 units we will take from the old stock, and what the remaining stock still they need, that is 100 unit. So we will take from this 180 unit. Okay, of 180 units we are taking 100 units. At a rate we have to write 2 rupee 50 paise. So this is a total issue we have done. For remaining balance now, the closing stock with the company is 80 units at the rate of 2 rupee 50 paise. The amount comes to 200 rupees. This is what you have right. This is a FIFO method. Okay. So the next calculation is for LIFO method. How to calculate under LIFO method? Under LIFO method, you can see on 1st of January, they have opening stock as it is they have written. And on 2nd of January, they are issuing some of the materials that we have only one stock. So from this stock only we have to take. Correct. So we have taken, and the balance from 200 units, we have taken 150 units, and balance 50 units we have written for the same rate. Next come on 5th of January, we are receiving 100 units for 2 rupee 20 paise. Now, in the balance, again, earlier balance, this was the first stock and this was the second stock or the latest stock what we are having now. Now, the LIFO method, last in, first out. The latest stock will be going to issue first. Okay. So here 100 units next on 7th of January. What the 100 units the company is issuing, that they will issue from the latest stock, that is 100 units whatever they have received on 5th of January. From this stock they will be going to issue the materials. Okay. Old stock they will keep as it is. Okay, so now you can see here on 10th of January 150 they have received. So this was the old balance, and 150 now latest what they have received. Next, when they are issuing this 100 units again on 12th of January, see from this 150 units what they have received latest. So from this 150 units they are going to issue the materials. So you can see the rate here 2 rupee 40 paise. So this they are receiving. Okay, which stock you are taking, that stock rate you have to consider here. In the balance you can see this is the old stock what we were having, and this will be the latest stock balance. Out of 150, 100 they have issued, 50 units are remaining with the company now. Then on 20th of January they are issuing again 180 units of 2 rupee 50 paise. So you can see here 50 units they were having earlier. Second, after issuing 100 units they were having again balance of 50 unit, and this is a second stock, and this is the latest stock, that is 180 units what they have received. And at the end they need 200 units. Okay, they are issuing 200 units. So whatever the latest stock they have, that is 180 unit, they will take 180 unit at the rate of 2 rupee 50 paise. Okay, and remaining 20 units they will take at the rate of 2 rupee 40 paise, which is from the second latest stock. Okay, so they will issue the 200 units now. What the company is having the balance here, you can see the company is having the from this 50 units they have issued 20 units. Now they have 30 units with them, and this 50 units, the previous 50 units which they have issued earlier, you can see this is a balance from the beginning we are keeping, right? So this balance is as it is remaining. So this is what last in, first out. So closing stock, we can see it is 80 pieces with 172 rupees. Okay, the amount is 172 rupees. So now let us discuss the solution on weighted average method, where you need to find out the rate for issue. Okay, while issuing the material, it is receipts. So anyhow, you know, whatever the purchases they have given, all the purchases you have to take into consideration, and the balance also you will consider. But here you can observe one thing. I will explain from this point. So here 5th of January you can see 100 units they have issued for 2 rupee 20 paise, right? Now company is having two types of stock. Already they were having 50 units with them. Now with that 100 units now they have received. How many units now they have with them? The company is having now 150 units. Totally 150 units they have. And what is the amount if we consider 100 rupees here and here here 220 rupees. So 320 rupees totally the company is having. So now the rate you have to find out as per the weighted average method. So how do you calculate the rate here? 320 rupees divided by 150. The rupees column should be divided with the quantity column. Okay. So we are calculating rate, that is the amount per quantity, amount per piece we are calculating. No. So that's why we have to write the denominator should be the total pieces or the total quantity whatever we are having. Total amount divided by total quantity. 320 is a total amount. 150 is a total quantity. If you do this, you'll get 2 rupee 13 paise. 2.13333 it will come. You can take decimals any 2 or 3. You can maximum 3 decimals you can take, not more than that. Likewise, you have to do the calculation. See, whenever they issue, now they are issuing the 100 units if they are issuing. So out of this 150 units only they will be going to issue, right? And what is the rate? Here you are not having any confusion. Directly you have already calculated the rate here. This rate only you are going to show. When 100 you have received, 50 is a balance. This is the rate will be the same. 107 rupee is remaining. 50 units they have issued again for 2 rupee 40 paise. How we will consider this? 50 units we were already having as a balance. 150 we have added. Totally 200 units we have now. And what is the amount we have? 107. That is now 360 rupees has added, right? The total comes to 467. So 467 rupees divided by 200 units. If you do this, you will get 2.34. Likewise, they have issued 100 units. So one remaining balance is 100. Again, 180 they have received. So with this remaining balance, add 180. So totally the company is having the balance as 280 units. Now the amount for that is 683. 233 plus 450, 683. Now 683 divided by 280, if you are doing, you will get the rate. That is 2 rupee 44 paise. So now what the company requires at the end, 200 units, that is showing 2 rupee 45 paise, they will issue. So that is 488 rupees. For that they will issue, and the remaining balance will be 80 units at the rate of 2 rupee 44 paise, and the total amount is 195. So this is the calculation how we did for all these issues. Okay, so just you have to show the calculations at the end. This is how we calculate under the weighted average method. I think the concepts are clear. FIFO method, LIFO method, and weighted average method. Only one. This was a very basic problem where just opening stock, purchases, and issues was given. If you get any other transactions like returns, they will give, shortage, they will give, or sometimes they'll give loss of the materials, or again you may get received back. Okay, so in these cases you have to write returns and received back should be considered under receipt. Okay, and loss or shortage of material should be considered under the issues column. Okay, these points you should remember here. Just refer some more questions for the better understanding. If you have not subscribed to my channel, please subscribe so that you can get the updates for the upcoming videos. And if you have any doubts, post it in the comment section. I will try my best to respond. Thank you so much and happy learning.